I think there's going to be more to come. The current phase of slowdown is led by the softening of investment growth, which I think has actually happened since the end of last year, as it spread from the mining sectors to other related sectors as well. The next shoe to drop will be the consumer spending, which so far has been holding up, but we think going to slow down even more going to next year.
Investment growth is waning, consumer spending is slowing, and you also have the deficit not improving. Instead, it is worsening. Plus the fact you have workers out in the streets demanding for a salary hike.
Right.
How much trouble does it spell for investor confidence in the country?
It's definitely not a good spell right now, especially, I think all the trade balance, as you mentioned, is bad news for the currency as well, which would likely to remain to see pressure coming in. But I think, at the same time, this slowdown is very much needed to improve the trade balance going forward. So I think the economy is going through this important rebalancing process after years of overheating.
Indeed, you're seeing a rebalancing since the overheating of the economy, but what would you suggest to the economic managers to get the economy out of this current slump?
Well, I think what they need to do right now is to brace for a little bit of slowdown, to refrain from doing a big monetary or fiscal stimulus right now and let the economy get back on the balanced growth path. And then next year, if we are right in thinking inflation will come down, trade balance will improve, then maybe in the second half next year, we think there's room for some rate cuts, which would then help push the economy back on the growth trajectory.
Because the Central Bank of Indonesia has been raising interest rates amid a global economic slowdown. Should they be cutting interest rates sooner rather than later?
Not so much, because the IDR, the rupiah, is still very much under pressure. The problem, all these access still doing, acting a lot on the fixed income market. So they shouldn't be doing that too early. They should wait until all these signs of access really come down before they move in to put a priority on growth again.